Hey guys, so today is Tuesday and welcome to another trade breakdown. Yeah, as always, we start on a daily chart. As you can see right here, we are still within the trading range, so below the low right here and above the high, or no, above the low right here. Below the high right here and above the low right here. So yeah, we swept daily liquidity, but we are still trading within the range. We have a wick to the upside right here, which is important to us, and a wick to the downside as well, because we are trading within like almost only the trading range of yesterday's candle. So yeah, that's the important levels on a daily chart. Right here we have the 50-minute chart. So what is important here? So we traded really bullish, only up day yesterday higher, and also like managed to trade into the daily liquidity, and then we basically had a we did not had any high time frame gap today. We still have like this little one right here and the one right here, so these are just previous daily new opening gaps. So right here we have midnight opening price, London highs, London lows, which are relatively close or basically at the low of the higher time frame gap. We have London, New York open kill zone, sell side liquidity, buy side liquidity right here, and with the midnight opening price 8:30 and 9:30. And before we drop lower, I want to show you regular trading hours and then ES. So now right here we have basically regular trading hours, and what's important to me right here is the fact that we still have like the huge gap higher, so which was around 110 handles, so from yesterday, and we did not deliver back to consequent encroachment as we should, because we have a new opening range gap smaller than 120 handles, so therefore we expect actually price to trade back to consequent encroachment within the opening range. So 77% of the time we do it, but yesterday we could not and only delivered higher, and we also like have the higher time or the regular trading hours new opening range gap, which is from a previous day, so from the first day last week. I think we can also like delete this one. I don't really think it's important, but as you can see right here, we opened at 9:30, traded lower, and now are trading higher. This chart is delayed, just that you are not confused. So yes, actually a bit different. So we are still below the high right here, so we did not sweep daily buy sell liquidity. We have definitely the important bearish wick right here, which is basically an important level for price, and also like the bearish daily fair value gap right here, but that's actually not really important. We do have the wick right here, which we have on NQ as well. So if we drop to the 50-minute chart, we can see it's a bit different. So we also like have London lows right here, which got scrapped, and also like the New York open kill zone buy side and sell side liquidity. But we do have SMT right here and SMT right here, but I will go into that further in on NQ. So now let's basically drop first to a 5-minute chart, and I want to first basically talk you through my thinking process before I show you my executions, because it was a really mess today. Basically what you should have noticed already is the fact that we have a daily wick right here, so on the upper half of our trading range, I would say, so near our opening prices, and we do have another wick down here below the sell side liquidity, and right here we basically have the low of the regular trading hours, no, that's of the daily wick, but right here basically at 9:30 it's basically the high of regular trading hours. So as you see right here, that's basically regular trading hours because we open right here. That's our high of our new opening range gap. So if you switch back to electronic trading hours, you can see that right here with the opening, that's our our high of our new range opening gap, and we still did not manage to trade back to it. So that's basically the same on NQ. So yeah, just to keep in mind that right here we have basically our high of our new opening range gap. So today we did not had a new opening range gap. We can ignore it because it's more than 40 handles. So yeah, but back to what I was talking about. So we have basically a higher time frame PD array to the downside and to the upside, and price is trading basically between it. So with just getting into the charts, and that's your first look, you have to see that's basically perfect seek and destroy conditions. But not only that, we also now let's drop to the 1 minute chart and then we can talk through it. So what do we have right here? We opened right here with 9:30 opening. We did not sweep buy side liquidity right here. We only traded lower. We already swept the sell side liquidity of New York open kill zone sell side liquidity, and then we just traded lower and into the upper quadrant of the daily bearish wick. And we basically found support in here. And we had basically the low resistance bearish fair value gap right here, because we are already overextended. We are below all opening prices. We swept all session liquidity. We swept London lows, we swept New York open kill zone, and we traded into a higher time frame PD array. In this case, it's the upper quadrant of the daily wick. So therefore, we never want to chase price. In that case, we don't want to take any shorts in here. We want to see this gap right here fail, and we want to take longs trading higher, basically targeting buy side liquidity. For example, the New York open kill zone buy side liquidity right here. But we traded back only to the lower quadrant of the daily wick, so on the upside, as you can see right here. So that's what I'm talking about. So that's the lower wick to the downside, and that's the upper wick, so to the upside. And we only traded to the lower quadrant of the higher wick of the daily chart. And yeah, we respected it and then just sold off heavily, with also having a bearish SMT. In that case, that's really important, because basically that would be a really important target, especially because our bodies are really equal right here. So yeah, just an important level. But we swept the buy side liquidity, NQ did not and broke lower. And we basically swept the sell side liquidity right here. So basically we had also unfinished business, because as you see, that's really trend line liquidity. So we just clean it up, and then we basically form a low and we also traded just below the low right here, and that's basically a short-term run and stop. So a really strong reversal occurred right here. We have a low, we have a low, higher low to the left, so a immediate term low, short-term low, and then we form a higher low to the right of the immediate term low. So that's our second short-term low, and therefore this low is protected, and you can expect higher prices. We traded into the fair value gap, but also barely traded into the breakaway gap. So always, because we do have displacement right here, and that's really important. So the displacement right here confirms to us that basically a low is in place, especially because we swept. We are already in oversold conditions. We swept sell side liquidity, formed also a bearish SMT, which is that not ideal, but yeah, we just did it. We swept the sell side liquidity, and then we break of structure. We displaced higher, and had basically two favor gaps right here on the 1 minute chart and this one at the break of structure. And always if you have like, so because the one right here is really small, we can like just take it as one bigger favor gap. So basically on a 2 minute or 3 minute, it should be only, yeah, as you see right here on a 3 minute, it's only one favor gap and one right here. So that's like the reason why we can't do that, because it's just, yeah, adapting like to a higher time frame. But therefore always if we have like two high favor gaps, we want to see price trade into the first one, and basically the second one should be respected as a breakaway gap. So therefore we want to see price only barely trade to it and basically stay within the upper portion. And price did that, so actually was bullish, and we were also like right here within our London close macro, and then we traded higher and traded basically into the rejection block right here of the 9:30 opening. And yeah, then we broke lower, and then with basically 9:30, so with lunch, we could now deliver higher and finally sweep the New York Open kill zone buy side liquidity and trade also to the upper quadrant. So that's what I was looking for. But yeah, so now in a second I want to show you more executions, but I still have to, before I do that, I want to explain what I was looking for today. So for me it was a really difficult day, because I was not really aware of the fact that we are really trading in difficult conditions, only regarding only respecting the daily quadrants of the daily wick. So we are in really seek and destroy conditions, which are one of the most difficult conditions, which are definitely tradable if you can or if you are experienced enough. But for me, it's definitely something I still have to improve in, and which I also like should basically try to avoid to trade. So I want to trade basically low resistance conditions where we can target external liquidity, but in seek and destroy we basically reverse also with sweeping minor liquidity, and therefore that's nothing I want to basically be a part of actually. So for me, market maker models are the perfect setup, and for that we basically should always be able to target external liquidity, and if we can't do that, the daily chart is not able to move, and then we should basically close our charts. But what I was looking for today is basically lower prices. So I don't know, I was really fixed on regular trading hours. I was still looking for yesterday's higher time, or yesterday's new opening range gap higher, which was still not traded to consequent encroachment. So I was definitely looking for lower prices, especially because the move right here to the upside is delivered in really low resistance, and therefore I just wanted to see like basically a move to the downside to the or basically tune the 9:30 opening price. But we could not do that, especially because of the daily wick, which supported price higher, and the upper wick, which basically kept price within the range. So we have resistance right here and support right here, and that's real resistance and support. But yeah, that was my bias. I wanted lower prices, and I was too fixed on my bias, so I shouldn't have done that. For me, I journaled that already. If we are already oversold and swept every session liquidity, I don't want to be a part of trying to chase price lower. So yeah, let me show you my execution. So it's a really mess, but there is also like a thinking process, and you can like see it after I basically talk you through it. Then I will show you my executions as always. But so I was shorting right here. That's basically my first trades. Some trades were actually just a failure. So not every execution mark is a real trade, but I will talk you through it in a minute. So right here was my first short. So basically the my thinking process was not really wrong, but in that case the conditions I traded in are definitely wrong, because we are really overextended to the downside. We are already below all opening prices, and we scrapped New York open kill zone, sell side liquidity, and London lows. And therefore we never want to chase price with big displacing candles. That was something I like did a really long time wrong. And today, because I was like, or I'm like taking a look, or trading a line with regular trading hours is still new to me. So I'm still like basically value maybe regular trading hours too much, but I will definitely get there, and mistakes like today will just teach me how it's like basically the wrong way. So definitely that was the wrong approach. I don't want to short in here or take any shorts. And yeah, so I realized that, got stopped, and basically went long after we closed above the inversion fair value gap, but or especially because at that point we actually do have a valid market maker buy model if we wouldn't be in signal strike conditions. But because we yeah, just have high resistance, and I got stopped right here, but we actually do found support, traded higher, I re-entered, and that was the stop right here was basically only a mistake because trading view is very slow. But yeah, I went short, added right here, no, I went long, added right here, and was aiming basically for the New York open kill zone buy side liquidity, also like for the upper wick, and also a partial could be the 930 opening, especially because we have like the equal bodies right here. But as I mentioned already, we respected the lower quadrant and then broke down, so I got stopped. But because I was aware of the fact that we had really clean trendline liquidity right here, and the setup which occurred right here was really bearish, and I was still hoping like for getting like shorts. I shorted right here and added right here, and then basically did not take any partials because I was not expecting seek and destroy. I was not expecting that we would only sweep the sell side liquidity and then reverse. I was expecting a expansion to the downside, at least reach CE right here or even lower. So therefore I got stopped once again, and then I was basically okay. Obviously I was revenge trading a lot today, but yeah. I was, I think, long right here again, and then that was basically, that's actually the right trade, because now we are within a really good long opportunity because of the immediate term low, because of the break of structure, because of the displacement higher. But I was basically rushing into it, and I should have like, I mean, the candle right here closes, and then we also like do have a fair gap right here, but we did not trade it into it. So this trade right here is really rushed into the market, and I should have waited until we basically trade back to a fair value gap, and that the first fair value gap, even if I like do not take the whole range, would be like the one right here. So, and yeah, we, as you can see right here, also like we basically respect the upper one as well. But yeah, I should have waited for that. So that's a short-term run and stops, and then we should allow price trade basically back to the fair value gap right here, because that's 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 our ideal entry PD array. But my target or my stop was basically too tight, so I got stopped right here. I don't know what that was actually, but then I went long once again after realizing we only like barely traded into the breakaway gap. So this setup is really valid, and I just had basically wrong money management, and yeah. So, but right here I was aware of the fact that the London close macro would definitely deliver higher, so I went long right here, added right here, and was still aiming basically for the New York open kill zone buy side liquidity, and did not take any partials right here, which is basically a bit of a mistake. But after like losing and losing, your mind is really fucked up, I just have to admit. So I got stopped right here. I was just aiming for the whole for the whole or for the bigger picture, for my external liquidity, I would say, from external target. And then wait, what's now happening? And then basically after getting stopped, so that's definitely manipulation right here as well, we are finally able to trade higher. So yeah, we eventually basically reached our objective, but we did not or we could not be a part of it because we are trading within seek and destroy, and therefore with sweeping any kind of with sweeping any kind of liquidity. So right here, for example, it's buy side liquidity. You have always to expect a deep retracement or even a kind of reversal. So that's basically seek and destroy. We take out the low or the high right here. We trade into the lower quadrant. We break down. We sweep the low right here, we reverse, we sweep the high right here and then reverse. So it's really just back and forth, really difficult price action. If you knew, or if you are aware how to trade it, or basically if you're aware of the market conditions and know how to trade seek and destroy, you can definitely make money, especially with like just right here. It's basically a valid long setup and just taking a partial right here and then taking a stop to break even. Then you could also like short right here and then just take a partial or even close your full position at the sell side liquidity, and then also like enter in here within the fair value gap, which is above the breakaway gap, and then just target once again only minor liquidity, not external but minor liquidity, which would be above the high right here or at the 930 opening, and that's just it. So that's for seek and destroy. You can't target external liquidity, and that is basically what I'm trying to do. I try to trade market maker buy models which only get completed with trading to external liquidity, and that's basically the reason why I'm basically just getting caught up in seek and destroy. And yeah, my revenge trading was definitely a mess today, but still these kind of days just teach me so much. So, and also like with trading, so with being like in the market, you also like are way closer to the chart. So if you just watch it, it doesn't feels the same as if you like trading with yeah, even if it's with paper money, but it's just a different feeling. You're just closer to it, and yeah, that's why I basically did not stop trading. But the inversion fair value gap right here could have also like been a really nice trade higher, targeting our buy side liquidity. So yeah, I think that's basically it. So what I have to keep in mind is the fact that I definitely do want to trade with or align with regular trading hours with the higher time frame, and I want to participate basically in oversold, overbought conditions, and then always like always like target the opposing, so the opposite liquidity. So especially right here with sweeping already London lows, New York open kill zone, sell side liquidity, and already being oversold to chase price right here is completely the wrong approach. And that's what I definitely have to get out of my mind, so that I try to only take or only even look for longs in here. Even if I want to see lower prices on regular trading hours, we cannot reach that today. So that's really important to keep in mind, especially because we can see price respect in the upper quadrant of the daily wick so well right here. So the bodies are really just sticking to it, especially right here with the wick as well. So that's not a sign of very strong bearishness, and we don't want to take any shorts in here. And yeah, that's really what I have to keep in mind, and also that I basically be more aware of the fact if we are trading within a range. So in that case, for example, the daily chart is basically locked. So the daily candle for today is locked. We are in seek and destroy, stuck between a daily wick to the downside, a daily wick to the upside. So therefore, we have to expect seek and destroy. We have to target internal liquidity if we are trading, but it's not definitely not a ideal trading day. But if we do trade for example, take the London close macro, which is actually really clean because of the immediate term low, as already mentioned, and also the breakout structure with the displacement. So that right here could have definitely been a trade, even if we have seek and destroy. This is like a really clean delivery higher, but then we just have like to have the right target. We don't can expect that we are trading to the upper quadrant of the daily wick instantly, because with sweeping any minor buy-side liquidity with any liquidity, we will always have like a deep retracement and just consolidate until we can basically manipulate once again, and then we are able to trade higher. But that's the reason why we have to be like, or why we have to aim for the low-hanging fruit and we can't basically target external liquidity. And also the fact that we also formed our high at 11 perfectly 11 basically shows to us that yeah, we are not able to trade higher. But yeah, so that's basically it. I'm always learning, but I will get there. So it's still just fun to see how the market plays out, how it's like every single day is different, but it's always a bit of the same. And that's why I love trading, because it's always like you never knew what you can expect for the day, but with getting more experience, you know how to handle different situations. And yeah, I will get there.